Hey, welcome back to Innovate Africa. Now, I always say we talk to businesses, speak to businesses who impact lives on the African continent through the value that they offer ordinary Africans, right? But the other thing we do is we speak to the businesses that support them. Today, you're going to be hearing from a man who's got a rich history in supporting entrepreneurship. His name is Tramayne Monaghan. He's the Chief Venture Officer of Next 176 that happens to be linked to Old Mutual, and their aim is to impact 1 billion lives on the African continent. He also worked at Tencent making up the vast majority of the headlines earnings per share of one of our biggest media companies, one of our biggest companies, Naspers, for example. Tramayne worked his way up the ranks there as well, and he joins you today to tell you his story. Tramayne Monaghan, what an absolute pleasure. I did mention that you are the Chief Venture Officer at Next 176, but who is Tramayne? And tell us more about the road that got you to where you are today.
Yeah, so interestingly, I'm what we call a recovering accountant. Started my career in the chartered accounting sphere, did the audit, but really quickly early on realized that the auditing and finance space was probably not suited to my passions. I was the audit clerk that would end up sitting on the desk of the MD or other interesting people in the business and starting to figure out what are the problems they're having, what's going on in their business, whether it be a labor dispute, whether it be a system implementation. It really fueled me being in business and commerce. And so after my articles, that was what I wanted to do. I didn't want to stay in the auditing realm. I joined a fashion industry player very early on and spent a very short time there before I found really my home in Tencent. Rose through the ranks pretty quickly through finance into CFO, and spent a decade of my life transitioning then from CFO to what we call now a Chief Innovation Officer. Fancy title, which means you get to build new business models, invest in startups, and design product. And really that's where my passion for this started. I was on the ground with this behemoth behind me that could build, execute, and scale at incredible rates. And I had an MBA packed in on product, distribution, business models, and investing for a decade of my life through this Chinese behemoth. And it was the juxtaposition of that versus my accounting that showed me I was in the right space. And that's what led me to Next, really, an experience in building on-the-ground product from 0 to 1 at Tencent, investing in companies at Tencent, and at the same time putting those worlds together.
Yeah.
And that's what we do at Next.
Tramayne, imagine I'm someone who knows nothing about this industry. I'm sitting across a dinner table with you and I'm asking you, what is it that you do? What exactly does Next 176 do? What would you say?
Yeah, in English, it's a really easy thing to understand. We do two things. The one is very easy to understand. We invest in startups. We look at the startup ecosystem. We look at key themes that we think are pertinent for the future. And at Next, this is an incredible thing we'll touch on now on how we see themes. And then the second thing we do, not only invest in startup, is we build. So we build ventures and businesses from scratch, from 0 to 1 based on those themes. What's the interesting thing to know about Next is it's not just about revenue generation, corporate growth, valuation metrics. We really do have an ingrained desire to impact. So we have this crazy goal of how do the things we invest in or build impact 1 billion lives? And the question we always get asked is, well, there's only 1 billion people in Africa by 2030. And the answer is absolutely. We want to build or invest in things that scale exponentially across the value chain and their impact layers. We believe that if we can give someone a job, we are not impacting one, we're impacting three because of the family they support, their gogo, their wife, their child, and then how they amplify across the ecosystem and how they amplify across the GDP becomes really pertinent to us. So we are impact and profit. And people say that, but we really mean it.
Now, would it be fair for me to suggest that you're looking to fix the communities that you're trying to sell into? Is that a fair assessment?
That is not an unfair statement if you bolt it onto the secondary impact of Old Mutual really believes in financial inclusion and creating an integrated financial services platform that serves the people that have trusted them for years, 178 years now. We are designed to start making change in those communities and finding ways in which we can amplify their lives, whether it be jobs, ecosystem, whether it be their inclusion into the financial world early on, so that one day they can become clients of Old Mutual in a trusted way as well. So we do start to blur the problem statement on the ground with the future of what financial services could look like.
I follow you closely on LinkedIn, and you wrote something that I find quite profound. Some people might call it obvious, although those who call it obvious don't do it. And you were saying that people who fund, people who invest, VCs, etc., need to get out of the boardroom and they need to get dirt under their boots, so to speak. Expand on that for me.
Yeah, stepping out of the boardroom is a key theme I've had for the bulk of my career. You know, I can tell you the genesis of it. We were launching an incredible product, WeChat Pay. A lot of us didn't have payment experience. So at Tencent, we decided, oh my God, how do we go impact how people pay without understanding on the ground learning? And the entire team, and when I say the entire team, from CEO down, we were all in the field interviewing. And the learnings we garnered from being on the ground with customers transitioned how we built products. And that's the challenge I now give my team when we invest and when we build. Get out of the office. I actually say the statement to them, how do you build product or invest in product while you're sitting on the 14th floor of a glass office in Sandton for the person in Khayelitsha or in Alexandria? You don't. You cannot even begin to conceptualize what they're going through. And that's why building for us is so important. Because in order to build, as any startup founder will tell you, that link to the customer is the most powerful thing they can get. And VCs are bad at this. VCs will sit and look at the pitch deck. They will look at the total addressable market. They'll figure out the return profile. They'll say the founder's amazing, but have they spoken to anyone around that particular product or service and who they are servicing? I don't think so. And there are some that may do it, so let me not blanket statement it. But I would say 95% of VCs and investors would never speak to a customer. We shift that. We specifically change that because we know how to build product.
All right, so give me an example of how you actually do that today.
We literally will take a product, a thought, a thesis, a vertical, and we will go into streets, into shops, and we will interview them. We were launching a early childhood development center mobile application that was trying to serve the needs of an ECD owner and running it like a business. That was our thesis. We went and met 50 ECD owners on the ground in their schools with their parents to get research. Not showing them a prototype, not trying to convince them to buy a product, asking them, what are the problems in your business? Why do you do things this way? Why is it actually important that this is written down versus digital? Let me not try and replace digital because it's sexy. So how do we build solutions and invest in solutions for people instead of it being sexy or innovative for the sake of that? Those are the things we're trying to break by literally sending teams down.
Once again, it's easy to say that if you've got it in your DNA, but what do you say to tech founders, for example, who might not have it in their DNA and they don't have co-founders who have the aptitude to be able to do that? What is your advice to them?
There's a very interesting metric you should ask yourself at all times. And I was an accountant, so please forgive that it is a ratio. If you put customer value and divide it by innovation, the answer should always be greater than 1. What this means is whatever value you're adding to the customer at the top needs to supersede the innovation and technical growth or build that you're doing. Your customer doesn't give a rat's if it's purple. They care that it works and solves their problem. So at all times, keep that ratio above 1 and you're in the right spot. The higher it gets, the better, but it can never be the inverse. It cannot be tech for tech's sake. It cannot be AI for AI's sake. It cannot be blockchain for blockchain's sake to get an investment. It needs to solve the customer's problem, which solves your distribution and your monetization and the scale of your business in the long tail.
A skills pipeline is something that every continent needs to be sustainable. In Africa, we've got a lot of young people, 650 million under the age of 20. So lots of potential there. The world is getting older. Europe's getting older, right? So what do we need to do in order to get our skills flow for the future?
I think it's an interesting question, and you raised some first world countries that have really big problems at a birth rate level and an aging populace, which we don't have, which lies in the opportunity. What they do have, unfortunately for us, is that the bulk of their populace is sitting at the top tier of Maslow's hierarchy. All of the physical needs and security they have sorted. I give this example when I speak to a few people to say, if their business fails, they can go sleep on their mom's couch. Africans don't have a mom's couch. It's just the nature of the beast. So we need to start thinking about, it's not about just reform about what we educate, it's also how do we start creating freedom for Africans to take risk in their own businesses. If we create that freedom, they will learn the skills of coding, of business development, of figuring out what the product is and what the customer life cycle is. But we need to create the ecosystem in which they can play, the ecosystem in which they are secure enough to take the risk and see that upside. We see that a lot in youngsters. The youngsters are becoming more resilient and wanting to take these risks. You just have to go to a tech event I was in last year, Tech in Ghana, in Accra, and the bulk of the pitches are under 21. And they've built prototypes. They're doing it at school, they're doing it with their mates. There's hope. But we need to continually fix what they're learning, how they're learning, and the security level. And the funding of that ecosystem becomes a really core part of that.
My big challenge, though, Tramayne, is school. And the current CAPS curriculum, etc., it's got its role, but it certainly isn't going far enough to build future skills. What is it that we need to do at school to build those future skills? And future skills, by the way, I don't only mean tech, ones and zeros and building fancy apps. I'm talking about thinking. So first principles thinking, design thinking. What do we need to do to create an ecosystem around these young people to deliver not just a success for themselves, but for the rest of the continent?
So the fundamental problem is the education system was designed a century ago. We're living with that. We're living with the fact that rote learning is still exemplified in schools because you can remember World War I started in 19 whatever, right? And we need to change that. So the education system is flawed because truthfully, the best way we empower youngsters is if we can figure out how to teach them distinct first principle thinking, problem solving, research, working in groups, forming teams, and changing their lifestyle through that. The fundamental problem on that level is the private schools are moving towards group learning, massive projects, go build a bicycle out of recycled goods, but the education system that serves the bulk of South Africa is not there yet. So we need then to figure out, can private sector come in? Can we create more NPOs that come in and start teaching the type of learning that brings these individuals into the workforce, into the problem-solving space? We will come to a juxtaposition in reality where education from a tertiary level will no longer matter. It will matter how smart you are, how you think about problems, how you solve problems, and what are your EQ levels around working with other humans. We need to be doing that at a private level now until governmental education can catch up. And that's going to take a long time. So we are broadening the gap, unfortunately, because private schools are doing this and government schools aren't yet. And that still is a very big problem for our country.
Now, is that something that Next 176 will invest in?
Look, I think it's not our core mandate to do NPOs, but really what we do try to do through our investments, through how we partner, and through utilizing innovation with our group, we do at all times want to figure out how to uplift this mobility in African youngsters. We have a core mandate in our team that goes beyond just investing in return profile, and we have an OKR that says, how do we uplift the next African founder? We might never invest in them. We might never make a rand on that startup that they form. But for us, it's important because it grows the ecosystem. A successful founder out of Khayelitsha does more for the next generation of founders than any corporate can do in this country. And that becomes important. We need to start telling our stories, but we need to start figuring out how to uplift the ecosystem.
Let's talk a little bit about the role of corporates when it comes to helping scale innovative businesses that need to create traction. Corporates, especially if you look at the African makeup, 80% of African corporates sit in South Africa, changes this market dynamic in South Africa greatly compared to the rest of the continent. But what responsibility do you think those corporates have? Or should those corporates be thinking of, this quid pro quo? I help you, but you need to be able to help me as well. What's your take on that?
Look, and I think the corporate's role here, so I'm a capitalist. Let's be very firm.
Yeah.
We have great belief in doing good. We want to do good. We have really big goals in that regard, but I'm a capitalist. It's not about corporates just trying to figure out how to uplift and scale these startups. The corporate should also be asking themselves, how do these innovative young startups alter the DNA of what I'm doing? How do these corporates take these and say, I'm not just giving ESD funding to grow because I need to do it. How am I taking this, ingesting their innovation, their learning, their tech, their customer linkage, because they're on the ground, and transforming to how do I survive for the next 100 years? So let's bring it to a capitalist level. Yes, you're helping them scale, but guess what? You're also getting something out of it. It cannot be seen in a pure, we need to do this because what happens when you do it under those guises, money starts getting a little tight, and they're the first ones you cut off. And we don't need that. We don't want that. So corporates need to think the startup ecosystem and how I play with them is intrinsic to my strategic innovation over a long tail. If you can do that as a large corporate, that's really where the power is. And the step beyond that is we do have 80% of the corporates in continent in South Africa who have really strong balance sheets. They have the ability then to go a step further and invest in these startups. The burgeoning corporate venturing across the globe really is forming strongly in Southeast Asia. There is a really strong correlation between markets in Southeast Asia and Africa. Why are African corporates not doing more of it? Corporate venturing takes the burden off of capital coming into the country from external VCs and saying, let's use the money we've taken from our locals to regrow the economy.
Tramayne, I'm sure tons of people send you emails, they want to speak to you, they want you to invest in their businesses. So what have you learnt at Tencent and at Next 176 that you can put into an arsenal of advice to share with founders who won't necessarily have the opportunity to speak to you, but they're looking to speak to people like you. They're looking for sage advice. What do you have to say to them?
I think this is an interesting question, and I'm going to answer it because I love the corporate question. So I'm going to answer on the corporate partnering, and I'm going to answer on the investment side. And I think let's start on the investment side. I need to believe in you and your mission. You can't be building a business because it's fun to build a business. You can't be building a business because you know how to code and this website looks sexy. I need you to understand the problem statement. I need you to understand the pain, and I certainly need you to understand the opportunity stack. So when you're ready to raise funds and when you're ready to talk to VCs and investors, make sure you understand the nuts and bolts of your business to the nth degree. There is a power in a generalist. I don't mind if you know how to code like the top coder in South Africa, but you need to know a little bit more about the rest of your business. And on the corporate side, the truth of the matter is corporates can help you scale your business exponentially, but you also can't be a rebel. If a corporate asks you for an IT assessment and you fail it, you need to decide, do you want to use your time and capital to go and fix those things which a corporate thinks are important, but you don't, to get into that corporate? They do still have the power of the unlocking. So working with a corporate is an interesting dance. It's an interesting dance on priorities and opportunity stack. Use your opportunity costs, think about how you need to work. But in this country, the scale you will get through working with big corporates will far exceed, from a cost base and a time base, anything you can build specifically in the direct-to-consumer market.
Tramayne Monaghan, thank you very much for your time. There you have it, Tramayne, a man with rich experience at Tencent, at Next 176, doing his bit to help entrepreneurs impact Africa, impact people in real terms, impacting their lives, impacting their future. And in Old Mutual's case, backing Next 176, trying to impact 1 billion lives. So we won't only speak to the innovative businesses that can change these lives through creating value directly on the ground. We also speak to the people who support them. Thank you very much for tuning in, and I'll see you on Innovate Africa next week.